If you are watching this video, you are probably aware that Peloton has been one of the success stories on the stock market in the past few months. Peloton is up over 500% since March lows, and there is no end in sight. Just how high could the share price reach? In this video, I want to analyze Peloton's current and future business operations, their balance sheet and numbers, discuss whether Peloton stock is currently a sell, hold, or buy at this wild valuation price, and what you should know about Peloton moving forward. What is up, you guys? It's Nick back at it again with another video. If you haven't already, hit that subscribe button, smash the like button for the YouTube algorithm. I do a ton of videos like this, going over disruptor companies, tech companies, IPOs, electric vehicle companies, anything and everything personal finance to keep you ahead of the curve. All right, without further ado, let's get right into it. First things first, a little background on Peloton. Peloton was founded back in 2012 in New York City and was actually launched via a Kickstarter campaign back when people used to actually care about Kickstarters and donate to Kickstarters. The glory days of getting free money for doing virtually anything on the internet. It's an exercise equipment and home fitness company focused primarily on its most well-known item, the stationary bike. However, they do have other products such as a treadmill and a digital application that we'll be getting on later into this video. Let's first focus on their stationary bike. This, in my opinion, has completely revolutionized the way people are currently working out at home and using stationary bikes. Attached to the bicycle is a mounted TV with a live instructor doing virtual spin classes, helping to keep you motivated and increasing the overall consumer experience. They are the largest interactive fitness platform on the entire planet with over 3.1 million members. With the increased amount of people attending spin classes in recent years and the increased people working from home, Peloton was able to perfectly intertwine these two spheres, giving both spin enthusiasts and people working out and working from home the perfect experience. Pelotons are actually quite expensive, which may be explaining why the company is currently doing so well. Its retail price goes for around $2,300 USD per unit, but there's lower end models that can go around for $1,800 USD. Peloton stock is currently sitting at 122 USD, which is just incredible. Their 52-week low is $17, and their 52-week high, which was just recorded on the latest trading day, was 123.57. This is a share price rocketing to success. Peloton may indeed owe some of their overnight success to the unfortunate current health situation. From their IPO in September of just last year until about March, when the health situation was really ramping up, shares of Peloton were actually trading lower, down roughly 22%. However, with businesses being shut down, people being locked away, Peloton sales went through the roof. Peloton currently has a market cap north of 35 billion, making it a large cap company. They have a negative earnings per share as they reported income loss, they don't pay out a dividend, and they don't yet have a beta value as they are a very newly listed company. Going to their balance sheet, here we can really see just how well this company has taken off in such a short period of time. Focusing on their revenue, in 2018 they posted 435 million. In 2019 they reported 915 million, an over 100% year-over-year increase, and in 2020 they posted 1.825 billion in total revenue. This is incredible. This is almost $1 billion in additional revenue just in 1 year's time for a startup company. We see a very similar trajectory in their gross profit as they posted 836 million, well over a 100% year-over-year gain. However, their operating expenses remain incredibly high, really chewing into any potential net profits. We could see here that they had 917 million in operating expenses, and together with their almost $1 billion in cost of revenue, they came out again in the negatives, however just barely, posting negative 71.6 million in earnings. This negative 71 million in earnings was a monumental improvement from just the previous year, where Peloton posted an almost $200 million loss at negative 195 million. Going to the stats, Peloton is clearly overvalued right now when looking at their figures and considering nothing else, with a forward PE of 202 and a price to book of nearly 20. However, with so much promise and future potential of this company, many investors may say otherwise. They have a profit margin of minus 3.92%, a return on equity of minus 6.88%, have $1.76 billion in total cash and posted a ratio of 2.80, showing far more assets relative to liabilities, specifically $2.9 billion in assets and $1.3 billion in liabilities. Moving to the analyst ratings, with 1 being a strong buy and 5 being a sell, Peloton is currently sitting at a 1.8 between strong buy and buy. Ending Q4, Peloton's highlights included growing their connected fitness subscriptions to over 1.09 million, representing a 113% year-over-year gain, and paid digital subscriptions growing by 210% to over 316,000. Their fourth quarter was really one for the books, both literally and figuratively. They grew revenue by 172% to $607 million. They are really highlighting and showing the way people have fundamentally shifted the way in which they exercise by posting a 333% increase in Q4 alone in their connected fitness subscription workouts, representing 76.8 million workouts. You can clearly see the exponential increase to the amount of people utilizing these apps to help feel a sense of connectedness when we have to be physically separated, and bringing a sense of normalcy and fun and joy back to working out and to home fitness. People are also clearly loving their Pelotons and coming back to their Pelotons, which is very promising news for the future. Data was showing an almost doubling in average quarterly workouts per sub at almost 24.7 per quarter. This is very promising news. This is showing consumer interest in their product. It's showing that people like their products. It's showing that they're coming back and using them more often and increasingly often from quarter to quarter. Peloton made a few huge plays in the past few months, which really increased its users. It reduced its subscription price to only $13 and extended the free trial period to 90 days or 3 months during the height of the health situation during the months of March and April. Peloton is also expanding their operations and investing in other companies. They have acquired Tonic Fitness Tech. They are offering yoga and other exercises. They are expanding Peloton Tread, their treadmill product, to the US and Canada starting early 2021, and are continuing to aggressively expand, build new studios, reconstruct old ones to expand their market share as quickly and aggressively as possible. This company for me is really gaining stride and making all the right moves when it counts. This sentiment is clearly shared by many investors, hence its insane share price. Even though the share price is extremely overvalued, I do currently think Peloton is still a buy. Peloton has a very good chance, in my opinion, at really expanding aggressively, gobbling up other fitness companies and becoming a powerhouse in the fitness and home fitness tech industries. They have a ton of room for continued geographical growth into other markets, as they really only have focused on the North American, Canadian, and European markets thus far. With continued expansion, I can see them becoming a giant in the industry. Unfortunately, with the health situation with no end in sight, in my opinion, in the coming winter months, the next few quarters will be huge for Peloton and Peloton's share price. So for that reason, I am personally snagging up additional shares on big dip days. It is quite a volatile stock, so hopefully you can wait for those dip days to gain entry if you so choose to do so. I really do love this company. I personally love cycling using stationary bikes, and I think they are really bringing an essential product to the people where they are currently in their homes. Anyways, thanks so much for watching, guys. I really do appreciate it. I recently hit 4,000 subscribers. I'm really excited and happy about that. So thank you so much for subscribing. It really does mean a lot to me. Smash that like button. It helps out the YouTube algorithm, helps promote my video, and widens my audience. So please do that. I would really appreciate it. Anyways, see you in the next video. Stick to the plan. Cheers.